please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A veteran of many market cycles, Shankar Sharma, and he says that barring a few bad apples, the card still looked pretty good. Are we still in bull market? Because while the Nifty might be at 10,800,
it doesn't feel like
it. Doesn't feel like that. You know, a lot of my friends say my portfolio.
It's like the weather forecast. You know, the weather report you see.
Exactly.
The temperature is 31, but feels like 35.
Exactly. You know, a lot of people say my portfolio looks like 10,200. Some say my portfolio looks like 9,800. And the ones who have been invested in the 1% of the world say that my portfolio looks like the Nifty is at 6,500.
Well, I mean, that's the market for you. It's a mirror with a lot of individual facets. So depending on which facet is suiting you, you can choose that facet. I think for people who were unlucky, and I can only say that, you know, if you're stuck in a stock like Manpasand or even Vakrangi or whatever, you know, I can only put it down to bad luck because, you know, if, you know, dodgy accounting is a problem. I think there are many, many companies, including very large ones, who have the same or similar things. And that's true globally. But, you know, it's your bad luck if, you know, it was suddenly whistled out and, you know, somebody blew the whistle on it. But on the other hand, I mean, I think just small caps, which are sort of problematic, like these names, I think they have held up very well. And in fact, from the peaks of January, they are down about 25% or so,
yes,
more or less, which in any good correction, you would expect a small cap to fall at least 25, if not between 30 and 40%. That is par for the course. I don't think there's anything untoward at all.
Okay.
And, you know, I think I don't know whether it's been with you or maybe some of your colleagues, that in 2008, you know, that's a very good year to analyze data, okay, about market falls, because that is the biggest fall that a whole generation of investors has seen, and I doubt if we'll see another one like that when 60% index fell.
Yes.
Just an index follows 60-65%, which tells you stocks fell like 90, 95, 99%, right? If you look at that data, the ones that were below the market in terms of fall, which is below, I mean, rather more than 65, okay, which are real estate, commodities, and some banks, you know, infra, all of them had only one thing in common, and which was leverage. So all of them had debt. Companies without debt actually fell far less in the market. So the worst in those lots, I mean, M&M, etc., were like down 50%.
Yes.
Now imagine in a year like 2008, which is never going to happen to the best of my understanding, the worst that the unleveraged stocks fell was 50%. That means in a normal correction, if you're down 25, 30%, this is not a 2008 by any standards.
Yes.
Nowhere in the world. At 25, 30, 40, you're done. This is it. It doesn't get any worse than this.
But what do you think led to this correction in the broader market? Was it the euphoria of last year? Was it just that, or was it the long-term capital gains tax? Then you have this ASM, which, you know, a lot of people are blaming. What led to this sharp and brutal correction? On an average, the BSE stock, I think, is down about 36-37% on an average.
Well, go back to 2017 for the answer. We had a very, very bad, I think, July or August. Very bad. I mean, if you look at the index, you will see, I think the small cap index fell like 15-17%. And therefore, you know, stocks fell again 25 to 35, 40%. 4 months later, nobody even remembers that. Even you have a hard time remembering
yes,
it.
I
Right?
don't.
Think about it. And you watch it every day.
Yes.
Right?
Yes.
Mind scrolls away these events. And we say, 2017 was great and, you know, 2018 has been terrible. And I say, you had a similar fall in 2017, right in the middle of the year. And in fact, it had happened against post-demo. These things happen. Reasons always sort of, you know, conjure themselves up. But it's particularly in the small cap end of the market, if you're not prepared for a 20-30% cut like this, you have no business being there. So I don't see any of this as being extraordinary. We had a great 2017. The market was due for a correction. It was not due for a bear market. This is not a bear market. This is a good correction in an overall still what is a very strong small cap bull market.